everybody, I'm Robyn Conway, General Manager of Managed Funds and part of our client team here at Fisher Funds. Now, we came and did an update to you about 3 weeks ago in the wake of the US tariff announcements, and we wanted to come back and give you an update on what's been going on. Now, there's been some significant change over the last few weeks, and you will have no doubt seen that markets have rebounded. So I'm joined by our CIO, Ashley Gardyne. Welcome.
Hi there.
And we're going to briefly dig into some of the more recent developments and how we've responded and why. Now, Ashley, what's happened in markets and in tariff developments since our last update a few weeks ago?
Yeah, so if you've been following the global headlines over the last couple of weeks, you would have noticed that Donald Trump put in place a 90-day pause, which has really provided a real reprieve for markets. And in response to that, we actually saw the US market jump 9.5% in one day. So it was quite a lot of relief there. But then following that over the last couple of weeks, we've seen a sort of constant rollback of this tariff agenda. The Treasury Secretary in the US has talked about some pretty good negotiations with Japan, with other parts of Asia, with India. So that's provided some relief as well. And on top of that, even though the tariffs did stay in place on China, Donald Trump did wheel back tariffs on certain goods like iPhones, laptops, electronic items. So it's really provided some willing and showed that there is room for negotiation. And part of the initial sharp sell-off for markets was just concern that it was take it or leave it. So this willingness to negotiate has resulted in a rebound in markets, and markets are pretty much back to where they were pre-Liberation Day.
Great. And while all of this has been happening in the background, what's been happening in the global economy? Have there been signs yet of a weakening in growth or higher inflation yet?
Yeah, and it's probably still a little bit too early to tell is the real story here. I think if you look at some of the soft data, so we call things like consumer sentiment or business sentiment surveys soft data, and they have weakened reasonably considerably. But if you look at some of the hard data like retail spending trends or unemployment data, that hasn't really moved yet. And interestingly, the US jobs report for April, which we should have seen some impact in that if it was impacting employment, the economy actually added over 170,000 jobs during April. So there wasn't much of an impact on employment. And as we followed corporate earnings season, we've seen the big bank CEOs and the credit card company CEOs who have access to a lot of real-time data, seeing they hadn't seen much change in consumer spending patterns, which is really quite interesting. A few companies, though, did call out a bit of a change. So some of the fast food companies, the McDonald's, the Chipotle's, the Starbucks, and also some of the travel companies, the airlines and the booking companies who probably deal with more discretionary spending have noticed a bit of a slowdown, but nothing materially. So the reality is we haven't seen a huge impact on the real economy yet.
Okay, so not much economic impact just yet. Does that mean that the coast is clear? And if not, what sort of developments are you and the team still looking for?
Yeah, so there's been a really big rebound in markets, which is good, but it's still early days. There's still a lot of water to go under the bridge. And I think there's still, as a result, a lot of uncertainty. And until we get through this 90-day period, until we get a landing on tariff levels, it's really hard for businesses to make decisions, and it's hard to know what the ultimate economic impact might be on growth and inflation, not just in the US, but all around the world. So we're watching that really closely. And I think another important thing is the longer this drags out for, even if we do get to a good outcome, the more that it has an impact. Businesses hold back on decisions. We see in the headlines people pulling back on M&A, for example, people pulling back on decisions to build factories until they know the best place to put them. So that uncertainty is a real problem. So we could see a bit more volatility as a result of that.
And how does this uncertainty that we're facing right now compare with the likes of market events that we've had in the past, such as COVID or the GFC?
Yeah, I think it's always a really good way to frame things is to look back at different periods of economic uncertainty, different periods where markets have been volatile, just to really get a bit of a sense for how we should be thinking about this particular episode. I think the reality with this is quite different in that it's man-made. It's caused by one administration, and as a result of that, it can also be unwound pretty quickly as well if the administration is too worried about the economic or market impact. And I think that's potentially why we saw markets rebound in the wind back in the tariffs a few weeks ago, because the administration was worried about how it was impacting the economy and how it could ultimately impact jobs. So I think it's really important that this is quite different than some of those previous periods. It doesn't feel like COVID where there's this unanswered question: how long would borders be closed for? How bad would the virus be? How long would it take us for economies to recover? This feels like a shorter, sharper shock. And if you look back actually to the previous term when Trump was in power, there were actually 3 periods like this where we had a 10% plus fall in the market. But despite that, across that whole period, markets were up about 80%.
Yeah, which is always good perspective. Now, perhaps just finally, Ash, what have the investment team been up to through this period, and what sort of investment opportunities have potentially been created?
It's been a really busy period for the team, and there's actually been quite a lot of opportunity out there. So whenever we have a situation like this in the markets, the team are spending a lot of time trying to figure out, where are the opportunities? What businesses have been sold off too much in response to this news? Are there parts that have held up a little bit better so we can take funding from one source and move it into different businesses and different companies? So we did actually get the chance 3 or 4 weeks ago to really start changing some of the portfolios and take advantage of that volatility. And it was great to see that happening, particularly in our international portfolios. But it wasn't just our share market portfolios, our fixed income or credit portfolios as well. Saw quite a move over that period of time from safe government bonds to buying into a bit more corporate credit when the prices of those bonds fell and when spreads widened. So whenever we have a period of volatility like this, it really does just create a bit more opportunity for us. And now, in fact, our team are on the ground in the US at the moment. We've got a number of our portfolio managers and analysts traveling to different parts of the world, now starting to really assess at a company level what the impact of these tariffs might be, but also while they're looking for other opportunities as well.
Thanks, Ash. Now that's all from us for a market update for this week. Now, aside from market developments, it's always a good reminder to let people know that managed funds are a longer term investment option. So if you do have questions around your fund choices or would like to speak with an advisor, please feel free to get in touch with us at Fisher Funds. And we look forward to meeting with you soon in the near future. Thank you.